Well, good morning. So we'll discuss today the moratorium period. Moratorium period. Here, the Insurance Regulatory and Development Authority of India issued a master circular on health insurance on May 29, 2024, listing 20 provisions. These norms will make health insurance simpler, more accessible, and a reliable instrument for protecting customers' interest. So the master circular encourages insurers to adopt customer-centric policies. This can positively impact insurance penetration. It will lead to a UPI-like movement, deeper penetration, and higher adoption within the health insurance ecosystem. So previously, if a customer purchased a health insurance policy and decided to discontinue it during the policy term, she would receive a refund based on a short premium scale. This short premium scale used to provide lesser than the proportionate period. For example, if she had used the policy for 3 months, the insurer would deduct 6 months of premium. If she had used it for 6 months, the insurer would deduct 9 months premium, and so on. So this is a difference between the pro rata and short period scale. Short period scale always goes in favor of insurers, and pro rata is common to all, or rather favorable to the policyholder. So now after the free look period of 30 days, a customer can cancel the policy with a 7-day notice and get a proportionate premium back unless he has made a claim. So the insurer will only deduct the premium for the period for which the policy was used. This change provides greater flexibility to people who wish to discontinue their policy. Also, there is a reduction in moratorium period. The moratorium period has been reduced from 8 years to 5. Previously, after 8 years, an insurer could not deny a claim except in case of an established fraud. This means claim payment will become assured sooner. So prospective customers should not turn complacent. While purchasing a policy, declare your medical history, current health status, and lifestyle habits like smoking comprehensively, and then cashless approval within an hour. So the regulator wants insurers to achieve 100% cashless claim settlement and minimize settlement through reimbursement. The request for cashless authorization must be decided immediately or within 1 hour. Insurers must set up help desk at hospitals and provides pre-authorization via digital modes. They must put the necessary system in place. So the regulators emphasize on shifting 100% claims to cashless settlement will ease policyholders' financial burden, and cashless treatment is available only at network hospitals. So verify if your preferred hospital are in the insurance network and understand the cashless claim process to avoid last minute issues. Then discharge within 3 hours. Patients have often been held up at the hospital for hours after discharge because the insurer had not settled their bill. Some have incurred additional cost for spending an extra night at the hospitals. So the regulator has mandated that if there is any delay beyond 3 hours, the insurer must bear the additional cost. In the future, if there is any delay from the insurer side, do not pay the additional waiting charges. And the next one is coverage for high-tech treatments. The regulator has urged insurers to cover high-tech treatments hospitals are adopting, because health outcomes are improved by including coverage for procedures such as for robotic surgeries, oral chemotherapy, and stem cell therapy. So while many policies cover high-tech treatment, some have some limits for them. Customers should review their policy carefully and remain informed about the specifics of the coverage offered by it. If your policy does not fully cover such treatment, consider porting of the policy. Portability is allowed. In India, health insurance policy can be ported to any general insurer or standalone health insurer as per the choice of the policyholder. The last one is points customers must pay heed to. While the Master Circular sets many laudable goals, like making policies more inclusive, customers need to watch out for new things. For many senior citizens, those with pre-existing diseases, etc., while policies may be available, they may be expensive. So purchase health insurance at an early age before you incur a disease, as this makes access to health insurance difficult and raises the premium significantly. So while the Master Circular urges insurers to offer a wide variety of policies, customers on their part must make appropriate choices. Consider your family conditions and choose insurance features such as OPD, outpatient department coverage, maternity benefits, a planning for a family, and global coverage for frequent travelers and modern treatment coverage. So utilize the enhancement and fair look period from 15 to 30 days. Read the policy document thoroughly, focusing on terms and conditions, exclusions, waiting periods, and coverage limits to ensure the policy meets your needs. Buying policies from insurers who do not offer no-claim bonuses, as these bonuses are useful in combating medical inflation. So avoid plans with sublimits related to modern treatments, room categories, or diseases. So these are a few major changes, because recently the IRD has set 3-hour limits to settle health claims. The regulator has brought in several reforms in health covers aimed at improving service standards for policyholders. So the new norms will require insurers to approve cashless claims within an hour and provide final authorization for discharge from a hospital within 3 hours. The insurers will also need to provide a 1 month grace period for annual renewal of health policies and protect benefits under policies renewed within that period. Under the new norms, insurers have to ensure that hospitals release mortal remains immediately in the event of a death during treatment. Companies cannot repudiate a claim without the approval of a claim review committee. For settlement of claim, insurers must ensure, and TPA, that is third party administrators, must collect documents from hospitals and not call for them for the insured. So policyholders with multiple health insurance policies can select the policy under which they claim the admissible amount. The primary insurer will coordinate the settlement of the balance amount from other insurers. The new rules allow insurers to reward policyholders with no claim during the policy period or offering either an increased sum insured or discounted premium amount. So health covers claims to soon be processed by a National Health Exchange. This is started recently because all health insurance claims will be processed by hospitals and insurance companies through a single window, the National Health Claim Exchange. Health Ministry sources have already cleared it, and this is developed by the National Health Authority. This is ready under the trial, and now it has started operating. Currently, most insurance companies offering health coverage have their own platforms and processes to approve claims. Patients who visit hospital for treatment provides their insurance policy details or a card issued by the third party administrator or insurance company. So the hospitals then accesses the claim processes portal of the company and uploads the required documents for pre-authorization or claim approval. So on receipt of the pre-authorization claim form, the insurance company or the TPA authenticates and digitizes the form using its internal claim processing portal. The claim is then adjudicated by the relevant team. These data exchanges often involve PDF or manual paperwork, which adds to the processing time and increase the risk of errors. So now the National Health Exchange is the National Health Claim Exchange will collaborate effort between the National Health Authority, the apex body responsible for implementing the Ayushman Bharat, PM Jan Arogya Yojana, and the IRDAI. So IRDAI will continue to regulate the insurance industry. Health Ministry's motive behind developing National Health Claim Exchange is only to act as a facilitator for faster and more transparent processing of health insurance claims. Thank you very much.